crypto market is still the same. Just XRP moved up compared to others, which is actually a good stuff, right? Which is a good stuff. So now we have to look at what's XRP showing on a macro level. What's XRP showing on a shorter time span, right? Say on a shorter duration, this is what you're looking at. We are testing this moving average. That's a 100-day moving average plotted on a 4-hour chart. So if you're able to break this, yes, you're going higher. If not, you're coming back for a retest of this broken level. Now, if we can break this one and close, that's actually good news. Now, when that's happening there, what's your next level of resistance? So the first level would be the 0.9, which is the target for this range. Fine. So when that happens, you are getting a rounded bottom pattern, which highlights, okay, we can go higher if we manage to break that one. So giving that perspective, you are like, okay, let me see what's the daily chart looking like. And yes, you are in this corrective channel on the RSI. So if RSI can break this one to the upside, that's fine. We go through our targets. So if you're a pattern trader, you are watching this one. For a trend-based trader, you are looking at this particular stuff, because we've been in this from last December, right? We traded inside this, we had a break below, but we came back into this trading range immediately. Now there will also be questions. Now, yeah, we are going to look at Bitcoin, we are going to look at the entire market and discuss through this, but there will also be questions about nodes and other structures where we moved in, right? So people, when they look at different projects and look at what the price is doing, they need to actually understand, yeah, you actually buy assets when they are low in price, and given that you believe that the project is not going to go bankrupt, at least for some time. That's what Warren Buffett used to do in the earlier stage. Now, yeah, now when he has a ton of cash to manage, he won't look at those positions where it's, it's too tiny liquidity. But he used to call this like, okay, that's like, used cigar butts. They still have a puff to go. So if that's happening here with the 10x, 5x, whatever, that's massive for us. Now, we'll also look at like, what's happening with these assets, how the ROI is working, how stuff's happening, because some of these have just doubled. In last 1 week, when the crypto market is super slow, some of this has just doubled. But it's not all gold and roses there, but some of them have dropped as well. But when you choose 4-5 different assets moving on, and just one of them is doing bad and others are doing great, that's fine. Why? Because I'm going to give you some macro scenario here where you really have to ask these questions to yourself. If the crypto market as a whole is going up, that's great. But if we are consolidating based on this particular pattern shown in Bitcoin, we may have a little bit more correction, we may have a little bit more pain. But if we break this one higher, fine, we're going to go retest the 50K. If not, the bottom 33, 34 range, right? So given that perspective and the geopolitical scenario here, people do have to understand there's a lot changing. Because right now, if you look at the inflation, you're like, okay, it's like 8.5%. Am I missing something? Look at the food price inflation. Now that means a lot, actually, increasing 10%. So you are constantly rising. There is something changing, because you look at different markets and all of them are showing you this. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. So if you have seen this one and then this one, you understand, like, we are not moving completely out of XRP. We've just taken a small chunk of it to work on other assets if the SEC is about to bleed us more, because we are looking at the markets and the market can go really bad. Yes, this particular correction will look bullish if it's holding on to that 30% drop. But looking at history, you do understand whenever you have done this crazy going up, it happens to drop like this, 80-85%. Now you know why that's happening. On the other side of this, you look at the dollar on the macro, you look at the dollar on the short term, you're like, okay, that bullish flag just broke to the upside, and on the macro, you still have a long way to go. Now you look at gold and it's like, okay, gold, is it about to do this? Can it really do that? Yeah, historically, it has done that and even higher. Why? When you have this level of inflation and people see opportunities like this to make money, they get in even if they are late and they, push the price at that point. It's the blow off the top. If you are in that market, at that point, get out. But till that point, you are doing properly. You're doing it correctly. You're looking at the movements in the market and you're staying put. But here, in this type of structure, you are like, I really don't know what the market is about to do. But right now, there's a huge possibility that the market can drop. We've talked about this before and that is playing out. You are getting rejected from that level of resistance. Now, that's Tesla. Now, when you look at Apple, that pattern is a rising wedge. Rising wedge usually is a bearish pattern. So if that's bearish, then you have a long way to the downside to find a big support. That's hard to actually look at, right? Because when you're looking at the S&P 500, you do understand we have drops like 50-60%. So the current one of 14% is not that big of a drop. Even in this rally, if you are looking at, we had a 35% drop. So assume we're going to do 30%. So that still is like 3,200, and right now we are close to 4,400. So we have a long way to drop. And if it's following the historical correction, that 60% the market is going to bleed. So during that time, even 1% on these type of assets, and if they are doing really well, that means you are going to actually make that gain. Say you have like 10x, 15x, whatever from 1%, you make 15% of your portfolio there just by using 1%. But make sure you're not only thinking about the gold. Sometimes it can also be like this in the short term. It can drop like this. So when you look at the market, you do have to understand there's a lot of different possibilities. You buy in red and sell in green, not otherwise. So when you are in here, the projects like these where you get 30-35% a month back and it's getting strong, and you're looking at the price possibilities, like, okay, what the price is doing. When you zoom in, you're like, okay, the price is trending lower, fine. But look at the RSI right now. It's starting to trend to the upside. So you had this pattern which broke to the upside, consolidated there a little bit, and then broke to the upside. You reached the first level of resistance support range here. Now you're testing that one. So once you break that, yeah, you are going further to the upside. So the liquidity is going to increase. We have seen that drop to 10 million, and right now slowly grinding back to the upside. So that's okay, fine. Then you look at different projects. Now these are on a wax, so gas fees a teeny bit. And if you look at Polar's project, they just reduced the gas fee again. So that's not much, and you're kind of getting 70% as your ROI, right? So you look at Shea here. Now what happened before is like, you used to get 100% from this, and to increase the sustainability of the project, they reduced the ROI. So if you are looking at the tier where you are spending 430 Polar, you are kind of getting around 65% a month back. And if you look at the top tier, you're getting 1050 Polar back, which happens to be like, the top tier right now, and that makes you 100% a month back. So yeah, it was a little bit higher, but they reduced the cost, and yeah, they are maintaining that attractiveness for you to go into Everest. So that's 100% a month back, and this one 65%. That's still okay. So when you accumulate your rewards and the price is going nuts, okay, fine, you are taking the profits out. You are not just making more nodes, because nodes won't give you the money. It's the rewards which give you the money. So you need to take the right decision at the right time, looking at the price and price action. Because if consolidated in this range, you broke higher, buying pressure increased. Then you corrected back down, the pattern is still like this. So if you happen to bounce from this trade line, that trend line is actually going to push the price back up. And from here, you do have a possibility to do 100% to the upside. So yes, those projects are doing fine, and even just 1-2% of your portfolio helping you during this as a hedge against the inflation. Or if you are like, nah, that's super risky for me, fine, don't look at that. Look at gold. Look at silver. All of them are options. And gold right now showing you this pattern is super bullish. Cup and handle pattern, whenever it's breaking to the upside, it happens to run higher. From the history of same asset, you do understand that one. So with the level of inflation, you can see, okay, fine. Right now, I feel like the inflation is too much, but it can go worse. If you take the same exact chart and put it into a trend analysis just to look at what it's showing, it's like, you've trending lower. You've been trending lower from a long period of time. And then you're bursting to the upside, breaking that one right now. You're like, that is not looking great. If you are looking at the pattern trend and you're like, I personally think we can go much higher. But with the level of monetary policies and technologies coming in, we kind of have the lower highs here, right? Because see, this is like 20%, this is like 15%. So we may be somewhere close to 10, 12, 13 for the good scenario where you are not getting the hyperinflation. There are countries who are getting hyperinflation. You look at Sri Lanka, you look at Peru, you look at Venezuela and other examples, and you're like, okay, it can go crazy. But one of the good scenario where it's not good for the majority, but for those who are prepared, is it ends up in between 10 to 15, which the central banks are now kind of agreeing to. Right, so you are looking at different markets and you are kind of getting the same taste that you are breaking through this long-term range. Yes, when you look at last 25 years, last 10 years, you feel the pain because the inflation is reducing your purchasing power. But last 10 years, if you are looking at the pattern, you kind of get an inverse head and shoulder pattern here in the inflation. You're not trading inflation, but you're just trying to understand what the market is showing you. And then you step back and you're like, okay, fine, I got that pattern. We broke to the upside. Now what's next? This one, you're zooming out and you're like, okay, we are just starting. We've actually seen much worse for this particular country, Canada, for inflation in last 20-25 years. So if you're breaking this particular range, say you trended lower here and you stayed in that range for a prolonged period of time, and now we are breaking. So if you happen to break this high, that's kind of breaking, a long range of inflation, and you're looking for higher ranges, right? 15, 20%. Now put this into the column and you're kind of looking at, okay, that's not big deal looking at the history. Only when you zoom in and the mass media giving you this narrative, we have this sky high inflation. Yeah, that's when you look at like this, zoomed in. If you are looking like what Ray Dalio and other big guys are talking about, you look at these and say, okay, I think human beings have done this again and again, and human beings does repeat the same mistakes. So if that's coming into your market and dollar is about to break this resistance, dollar can still go 13% to the upside. Now 13% doesn't sound much, but when dollar index is going back to that level of strength, that's not good for a lot of different currencies who are having a lot of different debt which is denominated in dollars, because they now have to pay more on their interest rate. If they just want to service their debt, not just pay off, just service, they still have to pay more. So short term, yes, it's looking like this, but long term, looking at gold, you can also say, okay, even if dollar is going up, that should be short term, because if gold is showing you macro bullishness, it kind of happens to be opposite in the macro structure. So dollar is going to go up short term and then going to drop, as we've discussed before. Now all of this coming back into your stock market and stock market crash, people are talking about this all over. Now we look at S&P, then you look at the NASDAQ, you look at the Dow Jones, and all of them showing you something similar, that it's kind of went too much parabolic action. Now there is a possibility you may come back down, because if you analyze the pattern, you always look at these kind of structure and say like, okay, is that really a rising wedge? Because usually rising wedge never ends on a good note, and you connect this and see, okay, there is a huge possibility that it is like, okay, I may not actually want to be in that kind of assets. But look at countries and look at what's happening there. If you're plotting a trend line here for Netflix, you happen to see like, okay, we came back to the trend line and the price dropped like 50%. So if you're putting in that 50% of drop and considering what it has done previously before it rallied, you can say, okay, 40-50% drop in an asset like this is actually good. Because I would suggest, like, if we are going back to the lockdowns, which I really don't think so, but some countries are showing that symptoms and saying, okay, that's not off the table, we are looking that one too. But the price can really bounce back up. So we drop 50%, but if we go back up, that's a 125%. So you may be surprised with the short-term rally of some assets, but the area to look at is this range. If you are breaking through this one, that's bad. That's really bad. You take the average row here, that's another 50% drop. If you drop from there, you are going way lower towards the range of $160, $165. Understand this asset went towards like $700, and now when it shows that drop possibility, that's big assets, right? Tesla, Netflix, you look at Apple, Facebook, Amazon, and then you're like, okay, if they are dropping, the index as a whole is about to drop heavy, right? So if a drop like 50% is coming here and it's still inside this pattern, long term you're still bullish on that asset, fine. But short term in stock market can be a year or two. Unlike crypto market, because when you come onto the crypto market, you look at Bitcoin and say, okay, short term here can be like 3 months, 2 months. It's fine. If you're a trader, it's a week, a day and all. But if you're an investor, you're looking differently. Then you look at different assets. Say, for example, Ether, you go on different time frame. You can look at Ether on the same short time span. And you're like, okay, we broke higher. We are coming back to retest that one. We are still inside that. And if you're looking as a pattern trader, you're like, okay, I'm getting my base like this. That's the support. And then you're trying to connect your resistance. So when you're trying to connect your resistance, it happens to actually show you that it's a falling wedge. Usually that breaks to the upside. So if that pattern is playing out well, you're looking for a break of the pattern here and then a continuation higher. But it won't be the direct move to the upside. It will most likely break, retest, and then bounce. It never goes up in a straight line. Whenever it does, it comes back down like that, right? So if you are looking at this, now you're like, okay, what's the indicator suggesting me? Indicators are like, okay, we are near a breakout because it's making that double bottom pattern here, then trending to the upside. RSI suggesting Ether is slowly becoming bullish. When Ether is becoming bullish, the altcoin market is generally becoming bullish. So if you are an altcoin investor and you have stayed through this testing again and again, repeated testing of the support trend line, you were really waiting for a break higher. Now, this is zoomed out chart, right? You are looking at what happened recently and you are like, okay, that is fine. We got to break to the upside. We are testing the moving average. That's a 100-day moving average on a daily. So that's not bad stuff if you're bouncing from there. If you're able to break about 3,600, that's a higher high, higher low, and a higher high structure. Right now, you already have this higher high and you're trying to put that higher low in. If that comes into the market, that really means it's bullish. So those narrative coming out as a bearish idea, it may not stay there once you cross about 3,600. But if not, then you're looking at the general market like, okay, what is the negative scenario? Okay, now I understood that's the positive side of this. What's the negative side? Then you are looking at different range of support and you are like, okay, we are at the resistance, slowly getting resisted and pushed to the downside. Fine. So if that's going on, what's your short-term support within that trend? So you're looking at that trend, you're plotting this one like this. Okay, if we get a bounce, chances are I'm going to break this one to the upside. If not, I'm going to correct back to the downside. So that means you may still can possibly come to $2,500 in Ether. Similarly, the altcoin market will also go down. Now, yeah, that's there. You're going to look the market on the short term and you're seeing that's up, down, and it's always been that way. So when you're entering in this asset class, you need to make sure your time horizon is not that short, so you're not kicked out from the market with a loss. If you have enough time on your side and you're placed on the right assets And then, yeah, as an investor, you do look for some backs which can be explosive, which if works out, that's going to go high, right? That's all good. That's what we want. So guys, if you're receiving value for your time, please do hit that like and subscribe button if you haven't done that already. And if you want these kind of analysis for different assets for your portfolio, which I post on a regular basis, you can look at the Patreon. The link is given in the description below. So guys, I'll meet you on the next video. Bye for now.